If you've been day trading for any amount of time, you've probably been told that you have to have a 2-to-1 risk to reward ratio and that you need to have hard stop losses in place and static profit targets. But I'll be honest with you, I don't do any of that. I trade fast. I scalp. I get in and out of my trades manually, and my risk to reward ratio is often 1-to-1, sometimes even less, and I'm still highly profitable. In this video, I'm going to show you exactly why that works and why the real edge isn't some rigid formula. It's actually in your personal ability to read the market in real time. Now, a lot of what I'm going to be talking about is just an explanation. Afterwards, you're really going to learn how this works by watching how I trade. And the best place to do that is on my live trading streams. So after this video, you're welcome to pick up a full week trial to my live trading Discord community, where you can come in, watch us trade, learn the VWAP wave system, and get involved. Now let's discuss the strategy. Now, I don't just trade price alone. I trade reactions. That's why I don't need a 1-to-2 risk to reward ratio. I just need one moment of imbalance. You see, most traders are trying to predict where the market is going. And that's why they need a 1-to-2 risk to reward ratio. They're basically placing a bet and hoping the math works out in their favor over time. But I don't predict. I react to the price. I trade the moment where the market tips its hand, where order flow shows imbalance, where price rejects a key level, and where value shifts. If the setup isn't clean anymore, then I'm just out. I cut the trade. I'm not married to a price. I'm married to the reaction of the price, especially at my key setup locations. Now, the problem with risk to reward talk is it ignores the other half of the equation, the win rate. So if I'm taking clean, high probability trades, I don't really need a 1-to-2 risk to reward ratio because my win rate is somewhere between 70 and 80%. So when I combine that with tight risk and trade frequency, that equates to consistent green and an equity curve that really kind of goes on the up and up with low drawdowns and consistent wins. So it's really not about maximizing distance. It's more about stacking high probability outcomes. And let's take a look at what that equity curve looks like. So here's an actual screenshot out of my Trade of 8 brokerage account. And this is actually less than 1 month of data. Okay, so you can see frequent scalping that adds up over the course of less than 4 weeks to nearly $25,000 after fees. Right? Minimal drawdown, a couple of larger losers that might have gotten a little further away than I'd like, but a really consistent upslope on the equity curve. Now, the problem with most newer traders is that they're trying to catch a huge move and then ride it for a long period of time. The problem is that's only happening about 15 to 20% of the time. So most traders are overtrading and taking trades unnecessarily, waiting for that actual moment. So they wind up taking a lot of losses before they even catch that big winner. And then they've taken so many losses, they're hesitant to even ride that wave for that long because they want to make their money back from all the losing trades. So it becomes a very difficult system to trade. Now, I'm in and out of a trade in generally 1 to 3 minutes max, and I'm taking at least 10 to 20 trades a day, often with very little drawdown. So I don't need to swing for the fences. I don't need home run trades. I prefer to hit the consistent singles, and those base hits compound really fast. It's not out of the question to generate $1,000 to $3,000 a day trading like this. And lastly, my discretion is the edge. So look, if your system is so rule-based that can actually be fully automated, you really don't need to trade at all. You can program a bot to trade the system for you. So, if you really want something so rule-based, you should look into algorithmic or programmable trading. You don't need to hit a button at all aside from turning the system on. But my system, the VWAP wave system, is a highly structured, but it's not a rigid rule-based system. It's more discretionary. I'm using tools like the VWAP deviation bands, the volume profile, and the initial balance, cumulative delta, TickStrike, all to judge when price behavior confirms my short-term bias. And that discretion is what gives me an edge most traders never develop. So I'm not just entering trades, I'm just reading the immediate auction and taking my trades with it. So when you're trading highly volatile instruments like NQ or gold, and you're using static stop losses, especially with tight risk, I mean, really good luck to you. You're going to get wicked out over and over again. I use mental stops based on context. So if price violates structure or the trade no longer makes sense, then I just exit. I cut the trade. But I don't place hard stops in obvious locations. That's where liquidity is engineered. They'll sweep that area over and over again, so everybody stops in the same location. You need to avoid that. Risk management isn't just about a number. It's about awareness and skillful exiting trades. It's not so much where you enter the trade, about where you exit the trade that makes the most difference in your profitability. So in summary, I'm not breaking the classical rules of trading. I'm just playing a completely different game than most people. While they're trying to predict outcomes, I'm just watching reactions at price levels. While they're focused on some textbook formula, I'm focused on how the auction is shifting right now, right in this moment. And that's why I can get in and out fast, manage my risk tighter, and stay consistently green day in and day out. So if you've been trying to force a very rigid 1 to 2 risk to reward system and wondering why it's not working, maybe it's time to evolve. If you want to learn how to trade the VWAP wave system, a structured, repeatable, discretionary approach that's designed for scalpers, be sure to grab my free course setups guide. I'm going to include that link in the description of this video. And then you can join the section of our Discord to see how traders are using these setups every single day. So be sure to drop a comment below if this helped shift your perspective. And I'll see you in the next video. Make sure you like this video, subscribe to the channel. I'm always creating a video every week for my community. And I really hope you'll take me up on that free trial where you can watch us trade this each and every day, absolutely free for a week. I think you'll see how this actually works in real life, in real time. And I think that'll help you make a better decision. So I do hope to see you in the Discord.